Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 24th, 2025, and we're diving into the latest earnings report from VRTS Investment Partners. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. VRTS Investment Partners has just released their Q3 2025 earnings report, and there's a lot to unpack, from their adjusted earnings per share to their assets under management.
EPS and analyst forecast discussion. Let's start with the earnings per share. Analysts had forecasted an EPS of $6.71, but VRTS reported an adjusted EPS of $6.69. John, what does this slight miss mean for the company?
While the adjusted EPS of $6.69 is just shy of the $6.71 forecast, it's important to note that the difference is marginal. This indicates that VRTS is performing close to expectations, though the slight miss might raise questions about their cost management and revenue generation strategies.
Revenue and profitability overview. Moving on to revenue and profitability, VRTS reported total sales of $6.3 billion with net flows of negative $3.9 billion. Their assets under management stand at $169.3 billion. John, how do these figures reflect on their overall performance?
The total sales of $6.3 billion are a positive sign, showing a 12% increase from the previous quarter. However, the net outflows of $3.9 billion are concerning, as they indicate challenges in retaining assets. The operating margin of 21.7% suggests that while they are managing expenses, there's room for improvement in profitability.
Operational efficiencies and future outlook. Let's discuss operational efficiencies and future outlook. VRTS reported an operating income of $47.1 million and increased their cash reserves to $370.6 million. They've also raised their dividend by 7%. What does this tell us about their financial health and future prospects?
The increase in cash and equivalents to $370.6 million, along with a 7% dividend hike, indicates strong cash flow management and a commitment to returning value to shareholders. However, with gross debt at $400 million, they need to balance debt management with growth initiatives. The operating income shows stability, but they must focus on improving net flows to enhance future performance.
CEO/CFO statements and strategic initiatives. Unfortunately, we don't have specific statements from the CEO or CFO in this report. However, VRTS continues to focus on investment management and has seen positive ETF flows. What strategic initiatives should they prioritize moving forward?
VRTS should continue to capitalize on the positive momentum in ETFs while addressing the outflows in equity strategies. Enhancing their product offerings and improving client engagement could help stabilize and grow their assets under management. Strategic acquisitions or partnerships might also be beneficial to diversify their portfolio and mitigate risks.
Key takeaways. In summary, VRTS Investment Partners reported solid sales and a slight miss on EPS, with a notable increase in dividends. While they face challenges with net outflows, their strategic focus on ETFs and cash management is promising. Thank you for joining us, John.
Thank you. It's been a pleasure discussing VRTS's performance. They have a strong foundation, but addressing the net outflows will be crucial for sustained growth.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on VRTS's performance in the comments below.